Hello and welcome to another episode of the Startup Operator Roundup. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we'll be breaking down the biggest headlines from India's growing startup ecosystem. In the 130th edition of the weekly roundup, we'll be talking about the India Alliance raising concerns over Meta and Google and the alleged role they play in promoting communal hatred and bias in the country. We'll also be talking about the rapid growth in AI and how that is causing a surge in GPU capacity. Mastercard CFO describes UPI an incredibly painful experience for the ecosystem, raising questions about its efficiency. Then Dream Sports venture arm, which is called Dream Capital, they are shutting down following the collapse of Rario, which is a cricket NFT platform. Then we'll also be talking about Zerodha's Nikhil Kamath launching the WTF. This is What's the Fund. This initiative is aimed to support young entrepreneurs who are below the age of 22 years. So a lot of exciting news, stay tuned. But before we begin, if this is the first time you're tuning in to the Startup Operator, do consider subscribing to the channel for regular updates. We break down startup headlines, we interview some amazing founders, investors and operators from the ecosystem. And well, if you're a returning visitor, do let us know how we are doing in the comment section below and rate and review this podcast on your favorite platform. So let's get started. Well, Roshan, this has been an exciting week. Firstly, of course, the ICC World Cup has begun and, well, India is off to a good start. Mm-hmm. But on the other side, well, there are some very concerning news with what's going on in Western Asia. So I'd like to get your thoughts.
Yeah, I mean, it's a troubled time in that part of the world for sure, right? I mean, Hamas attacked Israel about a week back, and irrespective of which side of the political divide you are, we can all agree that violence is abjectly bad. Very, very sad. I mean, looking at some of the visuals on Twitter, etc., my timeline has entirely been hijacked by this news. I really hope there is a swift resolution of sorts, but although, I mean, this is an extremely, extremely complex issue. For those who are interested in some sort of a background on this, I would definitely urge you to check out this podcast by Martyr Made on Spotify. A fantastic 7-part series. In fact, I think it's the best podcast I've ever listened to. Gripping narration and storytelling on the Israel-Palestine issue. Like I said, very, very complex, difficult to really, sort of draw a clear line, black and white here on either side, right? But do check it out. Fantastic podcast, and it offers a lot of perspectives from both sides, right? So with that, well, I mean, the Cricket World Cup, I haven't even caught one match yet, right? I don't know. I mean, there's not so much of a buzz about this World Cup as there was about, let's say, the 96 World Cup or even 2011 World Cup, right? Were you born in 96? Thereabouts, right? Oh my God. Yeah, I mean, so there wasn't too much of a buzz, but although, I mean, today I think there's an India-Pakistan match, so I'll definitely be catching that. So, yeah.
All right, so let's get started with the news of the week. The India National Development Inclusive Alliance, or India, is an alliance of 28 political parties in India that represent the combined opposition coalition. This group has written to Mark Zuckerberg and Sundar Pichai, accusing their social media platforms for allegedly aiding communal hatred in the country and spreading bias towards the ruling party. These letters cite 2 articles by the Washington Post that expose how WhatsApp, Facebook, and YouTube are used by the ruling party and its supporters to spread communal divisive propaganda. And it also reveals the blatant partisanship of Facebook India executives towards the ruling government. The letter demands that Meta and Google ensure that their platforms operating in India remain neutral and are not used to cause social unrest or distort India's democratic ideals, especially given that we have the elections coming up next year. So this letter, actually this news kind of reminds me of the entire scandal with Cambridge Analytica, where the Facebook platform was used to collect individual data and use this data to run directed campaigns that kind of brainwashed people into believing certain narratives, right? And now this letter is kind of highlighting those concerns. So what do you make of that?
Well, Meta and Google are very powerful platforms, right? And definitely, we should regulate these platforms in terms of their intent and rights and whatnot, right? I mean, in fact, last week again, EU had pulled up Elon Musk on X's policy, right? And it's sort of a veiled threat. I mean, not even so veiled also. I mean, it was a pretty direct threat saying that, we will sort of stop your platform if you don't check all this alleged, fake news and mishandling of certain things or whatever, right? And Elon, being Elon, had replied on
Elon
the
fashion.
tweet itself, asking for what those instances are. And obviously, I mean, he didn't get any reply, right? I mean, these platforms definitely influence the news cycle for sure. They influence people's opinions and perspectives. They're supremely powerful, as the Cambridge Analytica scandal also showed us, right? But I feel like, people have to verify before they believe. That's it, right? Yeah, you get tons of WhatsApp forwards, from our national anthem being rated by UNESCO as the number one national anthem. I'd love that if that were the case. That, or some new fruit concoction that will supposedly cause that will supposedly cure cancer, right? I mean, you get all kinds of news, right? I mean, you have to. It's like, we're back in the olden days, right? I mean, there are all kinds of rumors. You have to kind of verify based on the source and based on your own common sense on what is true and what is not, and act accordingly. Really, it puts a greater responsibility on people. I don't know if we can just put that responsibility totally on platforms. However, I think platforms have to be 100% transparent, right? Which they are not, because they've stopped being, pipes and infrastructure and moved on to being publishers, right? So definitely, I mean, if you look at all of the stuff that happened on Twitter, for example, a year back or something, when Elon took over Twitter, right? I mean, they were willfully doing things in favor of one particular establishment, right? So yeah, I mean, irrespective of which side of the political divide you are, I think this is something that everyone can get around, which is that you have to demand greater transparency from your platforms, and be careful of them as well, because they can be a significant influence on your voting public for sure.
Folks, do let us know what is your take on this opinion in the comments below. It'll be really interesting to hear some of your insights. So there was this very interesting article put out by Sequoia, which says that for every $1 spent on GPU, roughly $1 needs to be spent on energy costs. If Nvidia sells $50 billion in run rate GPU revenue by end of the year, that implies approximately $100 billion in data center expenditures. The end user of the GPU needs to earn 50% margin, meaning that for each year of current GPU capex, $200 billion of lifetime revenue would need to be generated to pay back the upfront capital investment. This is excluding the margins for cloud vendors. Now, what this is essentially trying to say that the computing power required to generate the output which is desirable is highly resource intensive and also takes a lot of time to build these systems. And unlike traditional SaaS, right, which kind of the profitability grows with the scale of business, the unit economics improves. AI, on the other hand, lacks that, right? For every AI computing that needs to go in, the same amount of resources is needed. So how do you see this scale? Like, for one, yes, of course, AI has a lot of benefits in today's society, but in the short term, someone will need to foot the bill, right? So what do you make of that?
Well, I mean, any new technology, that is the case, right? I mean, initially the economics don't make sense, right? I mean, you look at computing itself, right? I mean, the computing power your phone has would have probably required buildings, 40 years back, right? Or even 30 years back, right? But then you've seen that how the technology has become more commoditized and become cheaper, more efficient, and more better, and so on, right? Similarly with AI as well, right? I mean, once use cases emerge, once it becomes a fairly common consumer appliance, right? And once everyone is using it, accordingly, I think the scales and the revenues will adjust. That is my opinion, right? And look, I mean, everyone understands that AI is the next frontier. Right, so which is why, I mean, you have massive investments from all of these folks, right? So much so that we spoke that Amazon is investing in chips and whatnot. Right, so all of these folks want to own the future, and to that end, investing in AI is a no-brainer for them. Right, I mean, see, if you look at how Google started, for instance, arguably, I mean, 25 years back, 30 years back, maybe search was not the not the in thing for people to do, right? I mean, the business model was not very transparent, right? And nobody knew how it will play out. But today, I mean, of course, Google owns the internet, right?
Even the CEO of Microsoft, in a hearing, he testified that the first thing that people do after waking up is have a glass of water, then they go brushing their teeth, and then they perform a search on Google. This is the CEO of Microsoft.
Right. Yeah. So I suppose, I mean, we'll have to wait and watch. Yeah.
But companies nowadays, they are getting really creative with the pricing plans, right? For example, Microsoft and Google, they're charging a premium flat fee on a monthly basis to these users. Adobe has come up with a credit system. Regardless of what tier membership you have, you get a certain allotted credits to run your AI prompts. But consumers, on the other hand, are coming and not showing a liking towards that model as much, right? But one thing which I kind of agree with is that we are now moving on from the whole excitement of AI and what it can do to actually using AI in a day-to-day stuff, but figuring out how exactly will end users be using it and how much are they willing to pay for it is something that will take a bit of time to.
That's a work in
finalize.
progress. That's a work in progress. Right now, it's a shiny new toy, right? And it's helpful in a certain case, a certain number of cases, right? The utility of that will have to truly evolve. Right? I mean, in basic knowledge work and so on, right? Of course, I mean, there are industries which it has sort of disrupted and, has order of magnitude efficiencies already, right? I mean, for you and me, I mean, we'll have to figure how that will sort of translate.
Right, yeah. Okay, so let's move on to the next bit of news. UPI is painful. Well, there's growing tensions between UPI and credit card or card giants in general. UPI is facilitating over 10 billion monthly transactions at zero cost to the merchants, whereas card giants such as Mastercard and Visa charge a merchant fee for consumer transactions. Now, towards that, the CFO of Mastercard has raised concerns saying that UPI's economic model is an incredibly painful experience for ecosystem participants who lose money on those transactions. He has also gone on to question the long-term sustainability of UPI and its impact on debit and credit cards. As you can see in this graph, UPI barely held a 1% market share in FY 2013, FY 2014, but move fast forward to FY 23, UPI has close to 60% market share. Now, of course, this will be a cause of concern for the card players like Mastercard and Visa. But in India, it's not only UPI, they're also kind of raising concerns over RuPay.
Of course.
Right? They're saying the rise of such homegrown networks which has zero merchant discount rate and offers features such as offline payment, contactless cards is kind of really giving them tough nights, I would say. So what do you make of that?
Yeah. It's funny, right? I mean, it's socialism for me and capitalism for my competitors in some way, right? I mean, that's how they kind of think. I mean, these guys went and cried to the US government also a few years back, saying that the Indian government is, not very, violating free market principles and whatnot, right? Look, I mean, the UPI is once in a generation innovation, right? We've spoken plenty about it. And post demonetization, post COVID, I mean, it has grown to be the primary mode of payment online for people, right? And it is amazing value for all of the users, for sure, right? But someone has to foot the cost. We talked about how UPI may start charging transaction fee for a certain amount afterwards, right? And we made the case that yes, I mean, it has to be chargeable at some point of time for a certain level of transactions. Right, because someone has to foot the cost of processing, has to foot the cost of infrastructure and so on and so forth, which there is. Even if it's maybe 1,000 crores or thereabouts, someone has to pay that, right?
Percentage of the total transaction
correct,
volume.
Right. Right now, I mean, the NPCI is sort of taking care of that, and NPCI is basically like a union of all of the banks, right? A non-profit at that, right? So someone will have to foot that, and I feel like it is a utility that is beneficial enough that the government itself should look at it as an investment, right? Because what has UPI done for us today? UPI has made the Indian internet monetizable, right? Which means that anyone, anywhere can transact, right? And not just share, information and so on and so forth, right? And that is phenomenal. It has also made our economy more formal as well, right? Now, once you accept a digital payment, there is no hiding from the, from the taxman, so to speak, right?
No
So-
wonder we are seeing the GST councils get so active lately.
Yeah, I mean, GST and the numbers have been picking up, month on month, right? Collections have gone up every quarter. So obviously, it's a great thing, and the Mastercard and Visa folks, their model is severely hit, right? I mean, they're down to, I don't know what the percentage of credit and debit cards are specifically right now, but I would hazard a guess and say that maybe like 2/3 of their transactions are hit, right? Half or like 2/3 of
More
their
than half,
transactions.
actually.
More than half, right?
Yeah.
So that was a good guess. But yeah, I mean, obviously they'll cry about it, because this is such a, it's a disruption in their industry for sure, right? So yeah, I mean, they will let them cry about it. It's okay. We'll figure a way to run this, right? And even if the governments don't invest in it or whatever, I think look at the other positive spin-offs for the bank itself, right? I mean, they don't have to, build and run ATMs, right? I mean, certainly, it'll reduce ATM expenses.
Right.
It'll reduce your cash deposit expenses, right? You look at business owners who had to deposit cash at the end of the day and so on. I mean, all of those processing expenses, human resource expenses and so on, right? And importantly, I mean, it also will provide transaction history for people to sort of, offer lending and so on, right? I mean,
Right.
you're talking about UPI 2.0 and stuff, which will be more amenable for that. So I think it's overwhelmingly good, right? And whatever cost is, I mean, I think definitely we can bear that. Either the government can pick it up, or I mean, you can make it, you can have a transaction fee for a certain barrier, right? And people will be happy to pay, I think. Yeah.
Yeah. Well, this kind of reminds me of what Jio did to the telecom industry, right? When Jio started offering free SIM cards and subsidized pricing plans. Airtel, Vodafone, Idea, all of these companies faced a lot of issues. So maybe Mastercard and Visa can take a playbook from the Airtel on how they managed it.
So Jio is a private player. So there, I mean, I would have some reservations. But even if you look at Jio, right, what they've done is made the Indian internet the fastest, most efficient, and the cheapest, right? And today we have 600 million plus internet users, all thanks to the Jio, revolution, right? Was it completely like, free market and fair and whatnot? I mean, that is debatable, right? But they've caused the market to shift. And in countries like India, we need those industry houses like, the large guys, Ambanis, Adanis, and and so on, to invest in new technology, right? Because nobody else is going to do that, right? Unless it reaches a certain maturity and it's profitable enough to invest. And no one else is going to do that. So who's going to do that? And if you look at, more modern economies, developed economies like Korea, Japan, and all of them, even they have their own Zaibetsus and Kairetsus and so on, right? I mean, Korea, famously, the Samsung family owns 40 or 50% of their entire economy, right?
GDP.
And similarly, in Japan, you have Sumitomo, you have Yamaha, Toyota, and all of that, right? So we will need all of these people to put in money in greenfield ventures, right? Look at speaking of greenfield, look at green energy, for instance, right? Adani and Ambani are big investments in these ventures, right? I mean, you won't have your neighborhood HNI guy go and put some cash to see what will happen, right? So like with most things, the answer is complex, and in the short term, you have to tolerate some of these things with necessary guardrails that, it doesn't benefit one person at the cost of the consumers, I would say.
Well, so it has been a few busy weeks at Dream11 for sure. Firstly, they were hit with the retrospective GST taxes. Now that discussion is still going on. Then last week we discussed how they were coming up with creative ways so that customers did not have to bear the cost of GST taxes on the money they upload. And last week, Dream11 announced that its self-funded corporate venture arm called Dream Sports, they are marking the end of their experiment, and this corpus was the size of $250 million.
Wow.
Right? And this corpus did give rise to some notable companies like Rario, like Fitter. And in even 2021 interview, Harsh Jain, who is the co-founder and CEO of Dream11, said that the company wanted to redeploy its EBITDA into inorganic growth businesses and kind of build an entire ecosystem for the gaming industry. However, they decided to shut this down primarily because of the retrospective tax demand of 25,000 crores and navigating the entire new 28% GST levy. And secondly, which I think is a more bigger reason, is that Radio did not perform as expected. Radio is a cricket non-fungible token platform. They raised $120 million in 2022 April. This company is facing its own legal challenge. The Delhi High Court ruling has invalidated the rights it had acquired from cricket and cricketing associations for minting these NFTs. And this in return had some trickle-down effects. So what's next is that Radio's new CEO, Mr. Priyesh Karya, and his team are busy renegotiating these license deals. And Dream Sports is planning to set up an internal committee to figure out what are the next strategic opportunities for them. Well, Roshan, if you were handling Dream 11, what would be going on in your mind right now?
No, see, the venture arm is a bit of a luxury, right? I mean, given everything that's happened to the core business right now, so I'm not surprised that they decided to shut it down. But also, I mean, on a tangent, investing is really, really hard, right? Venture capital investing is extremely hard. I know, we have that survivorship bias, and we look at, the success stories and we think, man, I mean, it must be so easy to kind of make this kind of multiple, right? 10x, 20x, 100x, or whatever it is. It's extremely, extremely hard, right? It's a business of tails, which means that, you get maybe like 1 out of 10, 15 of these that really hit it out of the park. And you really need them to hit it out of the park, right? So it's not as simple as, okay, I have a bunch of money, I'm going to start investing in anything that sounds interesting, right? Investing is extremely hard. Shout out to all the VCs, I mean, people give them shit for all kinds of reasons, but I think it's a very hard business, really, really hard business to run, right? For sure. These guys invested $100 million in Radio, apparently.
Yeah, $120 million.
Wow, that's an insane amount of cash. I mean, the premise of Radio was interesting, to say the least, right?
Curating cricket NFTs.
Cricket NFTs. So you could buy perhaps Kapil Dev's catch, of Vivian Richards in the 1983 World Cup, or Dhoni's 6 in the 2011 World Cup finals, right? Or Sachin getting to his 100th century and so on and so forth. Right? I mean, interesting, for sure, interesting. And it's another revenue channel for cricketers also. In fact, I mean, ICC itself auctioned off the NFT rights for the World Cup at about $60+ million, apparently, right? So in India, what we've seen is with crypto, there has been a sort of a ambiguity on the policy front, right? And once the GST taxes came in on the crypto space, I mean, it made a lot of crypto investments unviable anyway, right? So yeah, I mean, none of these folks have performed really well. And plus there are some legal cases and so on and so forth, right? And so as a result of that, you've seen Radio not perform reasonably well, right? I mean, not perform well at all. By the way, we had interviewed Sonali of Fitter, the co-founder, on the podcast some time back. Do check out the episode. It was very interesting on how you can build a community and so on. So I'm not very surprised that they shut down the venture arm. I think they have more pressing troubles to manage.
Yeah. Well, but that doesn't mean that venture capital companies are doing badly. Because last week Nikhil Kamath launched the WTF fund. This WTF stands for What the Fund, right?
Interesting.
This is an initiative by Nikhil Kamath, and he aims to back young entrepreneurs who are under 22 years and have innovative ideas in the home, fashion, beauty, or lifestyle sectors. This fund draws its inspiration from Zepto, which is a startup fund by two 18-year-olds. They are able to kickstart the venture from a grant of 40 lakhs, and now today I think they're a unicorn. Then this fund, this WTF fund, also has big names backing it. Apart from Nikhil Kamath, there is Anant Narayanan, who is the founder of Mensa Brands. There's Raj Shamani. There's Kishore Biani, who is the founder of Future Group. And it's not just about the money, but it's also the experience that these guys bring in for these young entrepreneurs, right? And it'll be exciting to see what these build up, because right now, content as a business, I mean, that is taking off. And again, like this is another space we have just seen like what 2-3 years of that happening. So we really do not know what kind of form or shape it may take up. How would you place your bets in this?
I think he's extremely smart, right? I mean, he's built his own content platform, and they have decent distribution as well, right? So I've been following his WTF series. I have caught 2 or 3 episodes, and it's amazing. He's a great host, I can tell for sure, right? And he's got very interesting guests. Amazing to listen to Kishore Vianney, an old hand in retail, and a man who knows India's consumption like at the back of his hand, right? And then of course Mensa, Anant of Mensa is very, very knowledgeable, and Raj as well, right? I mean, he's a digital creator, one of the top guys around. So yeah, I mean, it seems like he's got a certain audience, and he wants to sort of offer capital to sort of fund some of these ideas, right? And age is no barrier, I mean, so Gunjan, you could start a business tomorrow. So apply to the WTF fund.
All right, let's move on to some other headlines from the week. Truecaller has acquired India-based Unodio Technologies Private Limited. This company provides a service called Trust Checker, which is a SaaS platform that helps businesses verify customer information and detect risk of fraud based on phone numbers and other digital signals. Insurance Dekho announced that it has raised $60 million in a mix of equity and debt in an ongoing Series B fundraise round. This was led by Mitsubishi UFJ Financial Group and just comes months after they raised a $150 million in Series A. Then you have Onsurety, which is an insurtech startup. They announced that they have raised $24 million in a Series B funding round, which was led by International Finance Corporation and existing ventures such as Nexus Venture Partners and Kiona Capital. We also have agri-fintech partner Kiwi, which stands for Kisan Vikas. They raised 15 crore rupees in a seed fund round, which is led by Caspian Leap for Agriculture Fund, Piper Sireka Angel Fund, Yan Angel Fund, and other entrepreneurs, foundations, and the rest. Now, what's interesting about this that this agri-tech startup is incubated in IIT Madras. So we did earlier joke about that there's something special about the water in IIT Madras, and it's good that we're having such startups come out.
Yeah, for sure. I mean, from Zetwork to the agri-tech
Kisan Vikas.
Yeah, Kisan Vikas. Kiwi.
So for the talk of the town section, I want to discuss, Roshan, your tweet. You wrote that in the early days, titles don't matter. People do what they have to do anyway. As you scale, however, title defines work. Important to be careful.
Yeah.
What did you mean by this?
I mean, at the risk of repeating whatever I wrote, right? In the early days, the titles don't matter because, see, you have a bunch of people in the room, people do whatever the hell they have to do, right? I mean, no one's worried about, hey, I am going to be your performance marketing guy, and someone else is going to be an events guy, and someone else is going to be some support, and someone else is going to be sales or whatever, right? I mean, we've had 200 plus founders on the podcast. All of them have done everything from support to admin to HR to finance to sales to whatever product they were building, right? So in the early days, that same ethos of the founder seeps through to the rest of the team when you're 30, 40, 50 people, right? But then soon after that, right? I mean, once work streams start getting defined, you have to be careful about, jobs and titles for sure, because it kind of sets the person in motion in terms of what is expected out of them. And notice also that this is when you start hiring more experienced people from the outside, right? Now, they're not going to come and straight away get into that 50-member ethos, right? You're not 50 members anymore, right? You're perhaps 100, 150, maybe 500 people strong, right? They're going to take those titles damn seriously, right? And whatever you call them, that is what they will end up doing, right? And then you can't be surprised at the end that, hey, you know what, that's actually not what I meant, I mean, you should have solved some other problems and whatnot. But enough to say that, there are certain things you have to start taking more seriously as you scale as a startup. One of them is titles. There are probably half a dozen other things, or maybe 24 other things, but one of them is titles. You have to be very careful about what you call people as you scale, for sure.
Some good food for thought.
Yeah.
All right, folks. So that is it for the 130th edition of the weekly roundup.
Wait. Aren't you forgetting something?
What?
the event?
Oh, right. Yes. Folks, last time we all met in person in Kormangla Social. The event was a massive, massive hit. We really enjoyed that you liked the event, and we want to bring more such events to you. And that's why we are excited to announce that on November 9th, we'll be doing the second edition of the Startup Operator Live. We'll be continuing with the theme this time as well, do more with less, which will be a masterclass on building sustainable businesses. We already have received one confirmation from a speaker, which is Sumit of Dukan. We hope you enjoyed his episode, which he put out recently, and I think more speakers we're still yet to finalize.
So I'm talking to a couple of folks as well, and hopefully we should have a confirmation soon. But yeah, two fantastic speakers, fantastic content, and a wonderful community. So if you guys missed the previous event, do show up for this one on November 9th, Thursday, on
Yep.
perhaps on a dry evening, not
evening with
not a rainy one with lots of traffic and whatnot. But
can't speak for the traffic though.
yeah.
We are still finalizing rest of the details for the event, but to know more about it, do follow us on social media. You'll find the social media handles on your screen right now. If you want updates to be delivered straight into your WhatsApp inbox, click on the WhatsApp link in the description. Like, share this video with folks you think will enjoy the show. And if this is the first time you're tuning in, do subscribe to the channel as we bring you exciting updates from India's growing startup ecosystem. We'll be back again with more exciting news next week. Until then, take care and have a great week ahead.
See you guys. Cheers.